Welcome to this almost Thanksgiving weekend. I hope you're prepping for Thursday. You're with your family and loved ones. I love Thanksgiving, and this is a great opportunity for me to say thank you. In case you don't know me, my name is Tom. I used to be a senior financial analyst with a good paycheck and a good corporate job. I quit that to do YouTube full time because that was my passion. I didn't know that you guys are going to take me from about 3,000 subscribers all the way to 90,000 within a span of 2 months. That was unthinkable. I thought I'm going to have a very long winter and I'll have to grind it out for many, many months. But you guys have literally overnight transformed my life. And I'm appreciative of this regardless of Thanksgiving. Daily, you are appreciated. Whether you signed up on Patreon, whether you're a channel member, whether you bought a t-shirt, or whether you're just watching the videos for free. I appreciate you because you're part of the process and you make me possible. Thank you so much. Without you, this whole thing doesn't even happen. So thank you, and just know that you are appreciated daily, every single day. Thank you so much. Now, in this video, I want to give you some value. You know, in my videos, I don't like to do fluff. I mean, I can do it and get a lot of views. I can do another Dan Bilzerian video, get some views, get some ad money. But where is it going to take you personally? How will it help you make better financial decisions? Because that's what I'm trying to do with this channel. It's probably not. I can do more news articles like some other YouTubers. But again, it's not going to progress you beyond some gossip. So every video I do now, I try to weed out the noise and focus on the value. How I can give you value in this video. And if you listen to my recent videos, I mean, we talked about Tesla going to 500 on November 9th. The price was 420 in that video. And since November 9th to today, the price is 570. Now in that video, I predicted 500 by the end of the year, but it literally surprised me as well. It's already at 570. So that provided value. We talked about Palantir before anybody else. When we talked about Palantir, the first video, the share price was $18. It's almost 30 right now. Now, of course, all of these bottom-feeding YouTubers started to regurgitate the same video again and again after Palantir went on rampage. But I mean, we called it first. So there's more value. And I think that's part of the reason why you guys help me grow so much, because you appreciate the hard work I'm doing. You know I'm not bullshitting you. You know I'm not taking money from anybody to promote stuff. There's no affiliate links. There's no courses. Just me working hard for you. May not be perfect, I may be wrong, but I'll always do my best to have your back. And I think that's why you guys are subscribing and liking the videos. Now, before I go on this large ego trip, let me come down back to earth. And let's talk about stuff that matter, because I got a little bit high on myself there. Now, in this video, it's not going to be hyped up. It's not going to be a specific stock, but I do want to give you a set of rules which will help you make better investment decisions. This video is much more important than you think, so I ask you to stick around with me. I usually give you the bottom line first, and then I tell you that you can leave. But in this video, I'll make an exception and I ask that you wait all the way through, because there's a lot of nuggets in this video I want you to hear, because it's going to help you make better decisions investing. This is about methodology. So I know I sound like this little professor, like an asshole. Yeah, this is important. Trust me, this is important. I've advised countless clients. Now, hey, I'm not a billionaire. In fact, you know, if I was a billionaire, probably wouldn't be doing that. I would be on my yacht, on my private island somewhere, having a Mai Tai. So I'm not a billionaire, but I help manage a lot of money for a lot of billionaires and a lot of big companies. So I know how to do this shit. So trust me, this is stuff that I've learned over a decade managing rich people's money. So you want to listen to this.
My name is Tom Nash, and I quit my corporate job as a senior financial analyst to break down companies for you. If there's one thing you need to know about me, I don't take bullshit from anybody.
Okay, so here's the experiment I want to do in this video. I want to leverage my experience, a decade worth of experience, showing you other people's mistakes so you can avoid them. Now, I know a lot of us need to go through a mistake in order not to ever do it again, sometimes more than once. I mean, there's a lot of failed relationships that fall into that category, but I hope if I give you enough information, at least for investment purposes, we can learn from these mistakes without ever having to do that myself or yourself or ourselves. So what I'm going to do in this video, I'm going to show you 5 of these mistakes today. And if you like the video and there's going to be a demand, I'm going to do a part 2 or part 3 or part 15, whatever. We can rocky the shit out of this. Let's see what happens. If you guys like it, if there's demand, I'll do more. But the idea here, even if this becomes the only video we do on the subject because there's no demand, is that we want to leverage the mistakes of other people in order to avoid these mistakes yourselves. So let's go through these 5 common mistakes I've seen investors do and how to avoid them yourselves.
I like to move it, move it. I like to move it, move it.
The first mistake I want to talk to you about, I've seen everybody do. including institutional fund managers and retail investors. Everybody is part of this mistake at least once in their life. I call it the like bias. A lot of people base their investment decisions, sometimes subconsciously, on the like factor, how much they like the company or agree with their actions. Now, I've seen people literally pass on good investments because of that factor. For example, some people won't invest in Netflix because of a certain show. Some people won't invest in Palantir because of the work they did with ICE. And I agree with that. Because if that passes the threshold of your morality clause where you can't work with that company, so be it. But based on my methodology, which I showed you in my previous video, the moral compass of the company is in fact a factor, but it's only 20% of my decision. I'll never solely base my decision based on the moral compass of the company, on how much I like the company, unless they cross the red line. They cross the red line and they do something so heinous, it's off limits. Boeing is my example. I'll never put money in Boeing because of what they did with the 737 MAX. I believe that this was criminal. In my opinion, do your own research, blah, blah, blah. I believe people need to go to prison. I believe this was heinous. My personal belief, that's why I'll never put money into Boeing. But that's not because I like or dislike Boeing or Airbus. I don't give a shit. I think this was criminal. And I think people need to go to prison and need to be held accountable. That has nothing to do with likability. So before you chase away good investments based on some Netflix show or some decision of a company to work with this or that, come on. Let's think about it the way I suggested in my previous video. Your decision should include these factors, 100%. The moral compass of the company is something you need to consider. But there's literally 4 other equally important factors. How good the financials are. What are other smart people are saying about the company. How good the management is. How good the business model is. Is it scalable? You need to be looking at the macro of it all, not at one specific category out of these 5.
I am not fucking drunk.
Can you tell the time?
Yes. I am not fucking drunk.
Mistake number 2 is trying to time the market. And believe you me, I've seen some really smart people really fuck this shit up. Let me give you an example. Did you ever see a drunk person walking on the street? I'm talking like really heavily drunk. Every footstep is gonna land at an undisclosed location and you can never predict where the next footstep is gonna land because the man is wobbling. There's an impossibility to develop an algorithm to predict where the next footstep of that drunk person will be because it's completely unpredictable. It's a hot mess. That is the stock market. It's a hot mess. It's completely unpredictable. It's impossible to time short and medium term predictions of the market. It is impossible. You can't do it. It's the drunk man theory. That is why I say to all my viewers, all my clients in the past, everybody I ever worked with, short and medium is impossible to predict. In fact, I believe that short and medium is a way of gambling. And you might make a lot of money gambling. Go to town. But if you want to invest, if you want to run smart with your money, you have to invest long-term in companies who have a future. If you do it this way, you eliminate the risk entirely. Let me give you the same example. The drunk person, let's assume that it's a stock we want to invest in. We can't predict where the next footstep is going to land, but let's say that this dude has a good job. So what happens? He wobbles all the way home, takes a shower, sleeps it off, goes to work the next day, decides he'll never drink again. And then over the next 10 years, does pretty well, finds a wife, gets married, buys a house. A lot of good things happen to him. So that he had one bad night. It doesn't define him. But if you're chasing short-term performance, every dip in the stock is critical, is crucial. You might lose your entire faith in the company because of a 15 or 20% drop. But if you're investing long-term, you have that confidence. You literally don't even check daily the performance of your stock. Probably check it weekly or once a month. You eliminate a lot of stress, you eliminate a lot of the risks, and you go long-term. It's no longer gambling, it's investing. If the team is good, the business model is good, financials are good, if it's scalable, if smart people around you think it's a good idea, not Gordon Johnson, but other smart people, then by all means, just do it long-term. If you know that you're investing for the next 5 years, you don't give a shit if the stock dips. Who cares? Let it dip. I heard people say it in the comment section, hey Tom, this stock and this stock dipped today. So what? Who gives a shit? I don't care. Long-term investment eliminates this whole discussion. We're talking about a plan for the next 2 to 3 years. That's how you need to think about every single investment. Do I think that in 3 years this company is going to be worth more? How much per year do I want to make? Let's say you have a target of 10% per year. Do I think this stock can make 10% a year over a course of 3 years? If the answer is no, don't invest. If the answer is yes, invest. If the company is on its way to make a quick spike, you might ride the wave and make a lot of money, but you may lose your house or your pens or your penis. Don't do it.
So a lot of guys came in, they say you're gonna get 40 million on your first contract. You give me the 40 million, I can turn it into 200 million by the time you're 23. I was like, I don't like this guy.
Unrealistic expectations. If I told you that you'll give me $1 million, we'll put it in real estate and we'll make 8% a year, you'd be ecstatic. It's a great return. But if you make 8% a year in the stock market, you feel you're underperforming because you look at all this shit around you. Like people making like 30% a day. Palantir just made 100% in 2 weeks. I mean, who gives a shit? It's all lies. It's all fake. It's like looking at an NBA game and saying, hey, look at these guys. They're making 30 million per year. I can do that shit. No, you can't. There's a small percentage of people who make money on the stock market, short and medium term. I've explained this countless times. Let me give you another example just to clarify how important it is. Over the past year, the S&P went up by 10%. It's a great performance. If you held to an ETF that did 10% a year, good for you. In that year, you know how much the average investor did who raced against that S&P ETF and bought and sold stock? 2.5%. On average, 2.5%. In fact, beyond the 2.5% average, 85% of them lost money. So, here's the thing, guys. You need to understand that shit. Unrealistic expectations lead you to lose money. You don't come into the stock market expecting to make 30% per week. That shit doesn't happen. You might get lucky. Like, you might have a good date and get lucky, but this isn't going to happen every freaking night. It's a long-term play. It's a marathon. Set your goals in advance. Let's say I want to make X% per year and stick with it. Don't look for these quick gains and these insane returns. When the market is boiling hot, like it is right now, it's really easy to make money. The market isn't going to stay boiling hot for a while. And trust me, all the smart money will be out before you even know it. They can move much faster than you. They have information much quicker than you. You can't compete against institutionals. Trust me. Stay in your lane, fix a course, and go the long run.
Although Jim Cramer did write an article for MainStreet.com complaining that we had unfairly used a video clip out of context to make it look like he recommended buying Bear Stearns stock a week before it collapsed. Okay, I was wrong. Actually, it's true. He wasn't saying to buy Bear Stearns. He was simply saying that if Bear was your broker or that your money was at Bear, your money would not disappear. He was not addressing the value of holding Bear stock. So, Jim Cramer, I apologize. That was out of context. Technically, you were correct. You weren't suggesting to buy Bear Stearns. That was something that you did 5 days earlier in your buy or sell segment.
I believe in the Bear franchise. You know what? It's $69. I'm not giving up on this thing.
Yeah!
Number 5, and I gotta admit, some of the smartest people I've met literally do this mistake, and I can't understand why. Watching freaking CNBC Mad Money. Jesus Christ. Now listen, I like Cramer. He's a funny guy. He makes a very good show. I sometimes watch it for laughs. You shouldn't be basing your investment decision on a guy who told you to buy Bear Stearns literally days before it collapsed. I mean, come on. Jim Cramer is an entertainer. CNBC are a bunch of morons. They don't know what the fuck they're talking about. Listen to some experts. All you need to do really, instead of watching CNBC, listen, if you're watching CNBC for entertainment purposes, great. I do it sometimes too. It's fun. Mad Money is really fun to watch. Now here's the thing. If you want to get good advice from smart people, go on Tip Ranks. Look at the top 5 in your category. Look at the top analysts in your section, in your category. The information is there. They're giving away their advice for free. Just check out the really performing people. Some people on there have made 30-40% this year. They're constantly at the top of their class. These are the people you should be modeling. Go and look at what ARK Invest is putting their money in, what Kathy's doing, what Warren Buffett is doing, what Ron is doing. I mean, there's a lot of these people who you can mimic and learn from, and they're so big, they're so rich, they're not trying to hide that information anymore. It's all free. There's some level that they don't even give a shit if you make money. They're not competing with you. So they're literally giving it away. Again, with all due respect for Jim Cramer, you shouldn't be basing your investment decision on what this guy does and says. I mean, I'm sure he's a nice guy. I'm sure he's wealthy. All that, good for him. But listen, there's far better advice, in my opinion, do your research, blah, 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 to get investment advice from rather than watching CNBC Mad Money. Come on. Now, this was a quick little video. I give you 5 mistakes I've seen people do. Now, this is going to decide what happens next. If you guys respond to the video, if you click it, if you watch it, if you like it, if you share it, then there's going to be part 2. If I see there's no demand, it is what it is, you know? Maybe we did a lemon. Who knows? Anyways, again, Thanksgiving weekend is upon us. I hope everybody's well, healthy, spending time with loved ones and family. Comment below. Let me know what you guys are doing for Thanksgiving. I'd love to hear. Thank you again for supporting this channel, whether by watching the videos or signing up to one of the paid programs to support me. I mean, there's really nothing behind the paywall, just you guys are supporting me. So I'm humbled. Thank you so much. I'll see you guys in the next video.